We're now moving on to Chapter 4, Published Accounts, and Introduction. It is always going to be, in the exam, question 2. So question 1, if you remember, was consolidations. Quite complex, some of those areas, especially associates, subsidiaries, income statements, financial position. This is where we're dealing with published accounts for a single company. So obviously, technically, a much lower level of question. At the same time, where it might catch you out is where you may have been exempted from the earlier stages. So what I'm going to do is to be, as I'm covering this topic, be very mindful of the fact that some people might have been exempted from 1.1 or F3 as it's called these days, or perhaps you had a degree that gave you exemption up to this level. So I'm going to be sensitive to that as I explain this concept. This is one of the great questions in the exam. You have a trial balance, you have a few adjustments. Sometimes those adjustments are made worse by standards. So I've chosen to do a question, a past exam question, but without the standards complications, or without most of the standards. So let's make a start, therefore. If you would kindly turn to Chapter 4, Published Accounts and Introduction. The only danger here, I think, is redrafting, where you might have to redraft the financial statements given to you. In other words, the examiner says to you, here is a statement of financial position with some mistakes in it. Would you please redraft it? Or here's an income statement with some mistakes in it. Please redraft it. Now, very recently, we've had this kind of question. So I would suggest that you concentrate on the trial balance with a few adjustments, that style of question. When you're ready, please turn to page 71 as we have a look at some of these building blocks. Now, I have there in front of you a little cartoon which might just demonstrate how you will feel in the exam. The first figure that I have right on top there is meant to be you in the exam. That's you. You're resting on certain comfortable building blocks. These gentlemen, the 5 of them underneath you, are holding you up. They provide the foundation for you to launch into a huge mark. Published accounts is one of those topics where you almost start with 60% if you know the basics, which is a comfortable pass. What I'd like to do is to take you up to the 80-90% range. The only thing that prevents me taking you to 100 is the time constraint. But that's where we need to practice and do lots and lots of questions. But 60% is a starting point, so you cannot fail a published accounts question, provided you have these gentlemen helping you. Now, what I'd like you to do is to think of these various supporters of you. The first one, the first guy on the left, is called format. You can write their names down if you wish. The second guy on the right there is called depreciation. This is where most of the marks will go in the exam. The lowest level there, the third level, the person on the left, extreme left, cost of sales. The chap in the middle we can call tax, and the one on the far right is called standards, etc. Excuse me, standards will be a huge part of the marks, but the first question that I'm going to do, as I explained earlier, will be without very many standards, because we haven't covered the standards as yet. What I intend to do is in a little while, a few hours later on the tape, once we've done a few standards, I'm going to revisit published accounts to see how we fare. Okay, so those are the building blocks. If you want to feel secure and strong, you must know your formats. You must know how to do depreciation, straight line, reducing balance, that kind of thing. You must be able to do cost of sales. In a recent exam question, that was 8 marks for one figure, cost of sales. Okay, it has component parts, but very, very easy. Tax, very easy, 3 gift marks. And of course the standards. Right, I take you through the various issues in front of you there on page 71. You must know the formats. There have been some changes recently. The second point, you must be able to carry out routine procedures like depreciation and revaluation, all very easy, certainly once we've done some more standards. Cost of sales, tax, and the main suite of accounting standards, things like leasing. So I invite you to write down, mainly as an investment for the future, in a few hours' time. These accounting standards, the essentials of leasing, contracts, substance, which is substance over form, provisions, etc. Be very systematic and structured. Kindly underline that. Systematic and structured. You must separate out your workings from your main answer. So how to go about doing that? Just by the way, before we pass on, with a reasonable technique, I say you cannot fail a published accounts question. Please underline that. Beyond that, on page 72, I invite you to read the question there called Winger. As before, I've pointed at an exam question for you to have a look at to see what the standard is like. We aren't ready to do that question yet, but will maybe later on the course. The Winger, the question there, the left-hand side is what we call debits, the right-hand side is credit, so you can say debit, credit on the top of your question. So you've got debit and credit, quite a long trial balance, lots of little tricks. A common challenge from the examiner is in the third last line. It says equity or ordinary shares of 25 cents each, 150,000. So how many shares are there? If the share capital is 150,000 and they're quarter-pound shares, surely you can see that there are 600,000 shares. That's going to be crucial if the examiner then goes on to say provide 3 cents per share as a dividend. So you do not multiply the 150 by 3, but the 600 by 3. So do be careful. On page 74, you notice in part C, there are some discussion marks, 5 marks, the acceptability of the company's previous policy in respect of non-depreciation of property. Nearby, can you write IAS 16 points? Indeed, that is our very next topic. What I've then done is the main challenges of the question I've listed for you. So read that as well, please. The main problem students face with this topic is speed. So as I suggest there, it seems like a good idea to pick up some questions off the internet maybe, ACCA past exam questions on published accounts, once we've done the course and you've picked up all the essentials, and practice, practice, practice as much as you can. Beyond that, on page 76, you have some of the format points. So the first building block, as you saw earlier, is memorizing the formats. So if you turn to page 76 kindly, can you just write memorize? By heart, you must learn the SFP format. This should be quite easy for you because we've just been doing consolidations in the previous chapters. So this is a single company, which, if anything, is easier than doing groups of companies, of course. You will notice that you have the current year and the previous year. The previous year is just a comparative. That's just for information. In the exam, you'll be asked to do just the 1 year. But don't forget, the previous year does exist. Assets, non-current and current, coming out to total assets. Equity and liabilities, as usual. One or two finer details there, things like deferred tax, etc. Otherwise, nothing much for me to say. If you turn on, please, to the next page, you have there the statement of comprehensive income, as it's called. It's a bit like the income statement, except recently they've changed a couple of things. Again, you're looking at 2008, and 2007 is a comparative only. In the exam, you'll be asked to do just the 1 year. Revenue, cost of sales, gross profit, other income, etc. Profit from operations. Please underline that. The original IAS says that it is optional, but the examiner likes you to show it, so let's just do it. This is the profit from operations. It then ends off on profit for the year. Below that you have other comprehensive income. For our level of exam, all you need to worry about is gains on property revaluation. I suppose the reason why it's shown there, this recent development, is that the shareholder would like to know whether the value of the company's assets, like property, have gone up in value. If they have, in a sense, the extra value is attributed to the shareholders. Clearly, it hasn't been sold yet, so it's a bit controversial, the fact that it's shown at the foot of the income statement. But this is a new development. Be ready to do it if challenged by the examiner. So once more, before you move on to the next question, I would like you very much to learn those previous 2 pages, 76 and 77, by heart. What I would suggest you do, before you turn to page 78 with me, have a break for a few minutes, grab a piece of paper, 2 pieces of paper, and write out on a blank sheet what you think the balance sheet should look like. That is to say, the statement of financial position. Equally, for the income statement, write it out on a blank sheet. See how far you can go with the words, never mind the numbers. If you can't write the words down in the correct order, how can you cope with words and numbers? That's what I used to do as a student years ago. See how far I could get just with the formats. And then I used to try to cope with the numbers of exam questions, etc. Because really the skill is to get the numbers in the right order. And that can only come about by knowing your formats almost like you know your 2 times tables. When you've done that and you feel prepared, I invite you to come along with me to page 78, where we will attack a past exam standard question called interceptor. So take a moment to have a look at the question, please. So how to tackle something like published accounts? I believe, after teaching this topic for many, many years, there is a 4-step approach that I would like you to use. That is by far the best method I've seen. Something that I developed myself. The 4 steps are something like this. The first thing you do is to open up your required accounts. In this particular question, if you could quickly go to page 79, it says, prepare for publication, the bottom of page 79, prepare for publication the income statement for the year ended and the statement of financial position, sometimes called a balance sheet, of course. So I'm going to keep 1 page aside for my income statement, 1 page aside for my financial position statement. On page 3, I'm going to open up my workings. So that's the first thing we do. We open up our required accounts. The second thing we do is read the question. Now, the reason why I suggest doing it in that order is that as you look at your requirements, or shall we say, since you've looked at your requirements, when you begin to read the question, your reading is much more focused. For example, occasionally the examiner will ask you to prepare something called a statement of changes in equity, something called a SOSI, which I shall do in a few hours' time through the handout. Now, if the examiner says to you, do a SOSI, as you're reading the question, you're keeping in mind things that would normally go into a SOSI, things like reevaluations. But if the question doesn't have that particular item, you have a slightly different way of reading the question. So the first thing you do is you open up your required accounts. The next thing you do is to read the question. You then make your adjustments, and then line by line you must solve. So let us actually do that. Here is my attempt at interceptor. I would literally, this being exam question 2, look at that question, and when the time comes to doing it, I shall look at the requirements and open up on a new page. Every new question must be on a new page. I'm going to say name of question, interceptor, income statement, for year ended 31st March 2008. So the skill obviously is remembering the format, number 1, and distinguishing what goes into the income statement from what goes to the financial position statement. That's the second skill. Anyway, leave your page blank. Please go along to your second page as you pick up your balance sheet. So let's head it up. Interceptor, statement of financial position as at 31st March 2008. So that's my second page. Keep a whole page aside. If you feel you've got big handwriting, give yourself even more space. On page 3 then, let's open up our workings. This is where I would like to reiterate my method, ORAL. The O stands for open up, required accounts, income statement, balance sheet, whatever it might be. You then read the question, I would say quickly. Give yourself about a minute. This is on top of the 15 minutes reading time, which earlier you've used in some sensible fashion. You then adjust for additional information. Need I say that's the biggest marks? And then finally, line by line, solve. ORAL, a four-step approach. Now, just as a gesture, as I promised, if you've been exempted from the earlier stages, I wonder if I can do a quick recap of some of the basics. We need this as we attack this huge question. So what I'd like you to do is to divide, say, about 6 lines into 2 sections. On the left-hand side, I'm going to say, on the far left, that is, assets, expenses, and losses. Can I ask, these items here, are they debits or credits? Clearly, they are debits. If you want to increase a debit, you must further debit it. Instead, if you want to reduce a debit, what do? You credit it. Fundamental assumed knowledge at this level. It's the kind of thing we do at F3 every day. If you've been exempted from F3 or if you've done F3 a long time ago, I invite you to think about this little rule. Now let's try to match them on the other side. Assets or liabilities? Give me an opposite for expenses. What do you think? Shall we say income? And losses, opposite, profits or gains. Similarly, I'd like to grab hold of those items and ask you whether you think they're debits or credits. Clearly, credits. So, if you need to reduce a credit, you debit it. And if you need to increase a credit, you credit it, of course. So that is something that is in your head. You don't need to put it down on paper for the examiner, but you need to know it really at the tips of your fingers. For example, if a company buys more assets, it'll be further debited. So even though we don't do T accounts as such, it's good to know the language of accountancy, debits and credits. So that's just a gesture from me in case you were exempted from the lower levels or it's a bit rusty maybe, just to polish it up a little bit. Right, now, what have we done so far? Going back to our basic method, let me assume that we've opened up our required accounts. I'm now going to read the question, or perhaps I'll give you a minute to do so. So let's say you've taken a minute to read the question. Let's go back to page 78 as we attempt the third stage, and that is the adjusting for additional information. Right on top, can you say debit and credit, please, for the left and the right? The ordinary shares, $1 each, no problems. 7.5% redeemable preference share capital. And that has changed recently. The word redeemable means you've got to show it as a liability because it's something to be paid. So underline the word redeemable, and somewhere nearby would you say therefore shown as a liability. Just pull out a little arrow nearby, just say therefore shown as a liability. The 7.5% multiplied by 2,000 is 150. So if I take you back to the question, so what I was suggesting you do is call this a debit, this is a credit. If you multiply this by 7.5%, that is obviously 150. Quickly check to see whether in this trial balance this company has actually paid the 150. It hasn't, it's only paid 75. So would you agree that if 150 is due altogether and 75 has been paid, the other 75 becomes payable? What's known as accrued or payable. Similarly, if you have your 10% and multiply by 3,000, that answer is 300. And clearly that 300 is part of interest paid, including the debenture interest. So I can tick that off. The 300 is part of the 850. So that's under control. The deferred tax, accumulated profit, etc. are opening balances. Deferred tax is simply extra tax kept aside on grounds of prudence. I'll do that as a proper topic in due course. IAS 12 is one of my standards. HMRC, Her Majesty's Revenue and Customs, just tax. VAT is like sales tax. PAY is pay as you earn. NI is national insurance, little kinds of taxes. May I suggest that you draw a line linking the PAY and NI line to the 210. Just across your page, if you draw a line kindly. The number of people over the years that have lost a few marks, says the examiner, it runs into the hundreds. What I mean by that is some people will read interest received as 210, just reading across left to right slightly incorrectly. So if you call interest received 210, you're in big trouble. Or indeed, if you call your PAY and NIC 60, it means you're not reading across correctly. So draw one line, maybe using a ruler, and relate all the other items to that line. What else can I ask you about to brush up on the basics? The bank balance is a 2460 debit. Is that a good balance or an overdraft? Actually, it's a good balance. So be careful of that. The 2460, you see, if you base your knowledge on bank statements, that's slightly incorrect because a bank statement is a bank's version of the transaction. So whereas in the bank statement, an overdraft is shown as a debit balance, in the company's books, it will be shown, a debit balance will show up as a good balance. So be careful. We're looking at the company's books, not the bank statement. The bank statement is the bank's records. Do be careful. What else? The other non-current assets, the net book value, no need to do depreciation, as someone else has done it for us already. So, it seems like once you've opened up your required accounts in your initial, you then read the question. So you open up your required accounts, read the question. But when you start doing your adjustments, just make sure that loose ends are tied up. Things like accrued interest, accrued preference dividends, that kind of thing. Beyond that, on the next page, you have some staff costs. You have some overheads, etc. Beyond that, there's some depreciation and tax, all fairly typical items and to be expected in the exam. Therefore, we are about to start with our adjustments proper. So as per question, we're going to run through the various adjustments.